Hi, everyone. Welcome to this interesting session on cryptocurrencies. If you are here, let me know that you are here. So post a comment, say hello, and let me know where you are reaching out from. Because obviously I can't see anyone until you make that comment. So please, if you're online, let me see if you're here and making a comment. Because you could see me on Facebook, LinkedIn, or on YouTube. Oh, hi. Hi, Tokwe. How are you? So today's quite interesting. And then if you're a millennial, so if you're somewhere between 25 and 40, this is something that is very important. Now, the reason why it's important is because um, a simple scenario that I put up on my social media handles yesterday. If you ever went to the office, hi, Ewa Dollar Kolawole, nice from Lagos, yeah. If you ever had to go to your parents' office when you were much younger, right, you would have seen that they at some point they had like typewriters, they had like a secretary that will be doing all their typing. So your parents will write it down and then somebody would type it for them. But for me, I had one experience. By the time my mom was getting towards retirement, the whole computer thing came up. And all of a sudden, from having someone do all your typing for you, you had to have an email and then they had to learn computer. And then if you are part of the children of those learn computer generation, right? You agree with me that learn computer thing is still a hustle till today. It's still a hustle. so so basically what happened was that time moved and it moved quickly and they had to catch up, right? The reason why this session is important is because we're what in our 20s, 30s, 40s, and time is moving very fast. And so if you don't want to be part of that whole I'm stuck, I have no clue what is happening, then somehow or the other you need to start getting tidbits of what is happening when it comes to technology. Now, the reason why I'm focused on cryptocurrency, of course, is because this is my personal finance channel, right? And so we're focused on personal finance. There are different aspects, like literally different aspects of that conversation, right? That you can take part of, right? There are different parts of that conversation that you can be a part of. So today is just about cryptocurrencies because we need to what's it called? We need to get in that flow. Why do I talk about cryptocurrencies? Now, let's take it back to the history of money. Of course, we're going to have our guest speaker. She's like a crypto genius. When you meet Jennifer, you'll be like, wow, how did this girl become like this? How did this baby become like this, right? So let's take it back to the history of money. There was a time when it was straight by barter. Then money moved to the point where I would give you paper in exchange for your in exchange for the goods. So before it was, I have a cow, you have a shoe. We'll exchange, we decide, okay, two cows make one shoe, or one cow makes 10 shoes. Do you get? And then as we evolve now, we now got to a point where it was that I would value my shoe at 1 naira, and then you would value your whatever your cow at 10 naira. So we would both say, okay, I'll sell my cow to someone, get the naira and pay you. So we moved to paper money. And then at some point beyond that paper money, so what happened was that at that point paper money was actually backed by real gold in the bank, right? What that means is that if there was 1,000 naira in circulation, there was gold worth of what 1,000 naira in the central bank just waiting there. But over time, we now move from that paper money itself to money backed by trust, where as they started giving out debts, right, there was this money creation thing where the central bank couldn't actually hold all the money at the same time, as in couldn't hold gold in respect of all the money. Sorry, my guest is trying to come in. So so we couldn't hold paper money, we couldn't hold gold to back paper money. And then we moved on to money backed by trust. You would agree with me that we're at a point where money is backed by trust, meaning that with all the money in circulation, with all the money in your accounts, right? There's no central bank sitting down with all that. So if you think about it, so in Nigeria, they will say total money in circulation is about 2 trillion, right? There's no deposit, there's no gold deposit somewhere chilling for it. It's based on trust that as a system, we have said that anybody that is given a loan is committed to paying back, right? And that's the trust system that is working right now. But then the world is going digital. We are almost hitting, we are by 2030. The assumption is that we'll be, or is it 2030 or 2050, right? That there'll be 10 billion people on the earth, right? So the world is going digital because we need technology to be able to accommodate all the human beings that are coming. And there's also the part where life expectancy is expected to increase because healthcare, research into what's costing what, and changes are being made, right? So with all that, it's expected that life expectancy is going to increase, and then there are going to be more people, especially you Africans. We are producing human beings in the numbers, right? So we're going into technology. So as much as people are reserved or have their reservations around cryptocurrency, the question is, if life evolved from trade by barter, which was logical at that time, to someone saying, imagine those people when it converted to money, to paper, and you're like, so you mean that I would take paper, right? And then that's what you'll be using to whatever me. That's what I would say is there'll be resistance. So the resistance we are seeing right now is very logical. But if you understand that technology is the future, like technology legitimately is the future, then you should understand that somewhere in your mind, you should be creating mind share for cryptocurrencies, NFTs, Web3, all that drama, right? That somewhere in your mind, you have to create mind share for it. And that's what this session is about. Now, if you have any questions as we go along, what I'm going to do is basically the questions, because I put it up on my social media handle, and the questions that I got, that's what I'm going to be um, asking right now. So I'm going to put it in the comment section. Please post your questions. And then I'm going to introduce my guest as we go along. Okay. So hi Jennifer.
Hi, Ola. Thank you for
Can you
having
hear me?
me.
Because I know there's
Can you hear me
no.
clearly?
Yes, I can. So basically,
Okay.
Jennifer is like my cryptocurrency, digital currency hero, right? Because it's so amazing how she has um evolved in that space over time, right? And then one of the questions I'm going to ask, I know I didn't, that question you did not see it, is how did you actually become so much of a risk kid around crypto matters, right?
Yeah.
But let's start, right? And also, everybody remember, like, if you are listening, please drop your questions. We are here to answer as many questions as possible. That's really what this is about. It's not a textbook session. It's about answering the questions I have gotten from people over time about cryptocurrencies. So let's start with the first thing, right? I've given a background to why crypto and digital currencies make sense, but let's go down to crypto itself. What is crypto in like simple English?
Crypto is money on the internet. In simple English, it's simply money on the internet, right? The ability for you to send money from one person to the other on your phone without needing a centralized party to facilitate that transaction is crypto. There's there's basically no other basic way to explain what digital money is apart from the fact that it's money that can be sent just with your phone, or let me say with your laptop, but on the internet from one person to the other. So as long as you're connected to the internet, and even if you're offline, right? But you have a wallet because we have off-chain solutions now. Even if you're offline, as long as you can send value from one person to the other on the internet, and it doesn't have to portray that it's probably been double spent, that's cryptocurrency. So it's money sent on the internet from one person to the other.
So thank you for that. And I like the way it's very simple. Is money sent from one person to another? Simple, Abby.
Mhm.
But what is the backlash? There's this so let me put it like this. So it's a qualified question. People have reservations, right? I know that the reservations come from the fact that every time we hear of cryptocurrency, it's because it has gone up and it has come down, right? But beyond the trading part, what do people use cryptocurrency for? So that people can begin to relate with it as a tool, as against that thing that goes up and down randomly, right? So what is crypto used for beyond trading?
Beyond trading, the whole market behind cryptocurrency is built around speculation. And so you see people who have cryptocurrencies who aren't probably using their cryptocurrencies to trade, using it to secure the network. So let's take it back to a layman. If you're probably not in the western part of the country of the world, and you're probably in Africa per se, right? In where we are right now. Cryptocurrencies are very popular for the transfer of value across borders, right? I've actually done that before. I've used crypto to transfer value from one country to the other, and it was cheaper and more affordable for me than using my bank account, right, to transfer value. So it will depend on the region per se. It's a popular means of transferring value in countries where they probably have low uh, cross-border settlements of trades, right? In other alternatives. So yes, I think it will differ per, should I say, per geographical restrictions on what people actually use crypto to do, bringing it back to the layman. I said if it's on chain, apart from trading, you can use your crypto to stake, to secure the network, right? Because since it's a peer to peer network, we actually need participants who will secure the network well enough for others to use. And so you having to deposit your crypto online to secure the network for others will make it difficult for malicious actors to kind of double spend transactions on the network. And then you earn yield, staking rewards for doing that. Off chain, people actually
Okay.
use crypto to send money across geographical restrictions from country to country. That's a very popular off chain use case. We are
Use.
seeing gaining adoption or traction right now.
Okay. So, first of all, what is on chain, off chain? Because that one you just carried us far. But you
Oh,
guys, sorry, I actually realized that I did not introduce Jennifer. Jennifer is a research analyst at Messari. You can actually Google Messari. It's like the top New York. It's based in the US, in New York, and it's a top crypto research and analytics firm, right? And so actually Jennifer, even though she's based in Lagos here, she's eating, breathing crypto every day. So you guys have to give her that respect. But back to the point, right? What is off chain? What is on chain? So you talk about on chain and preserving the network. Can you give us a background? What does that mean? Because the truth about it is that most people, when they hear things like that, that's where our mind starts going, okay, okay, okay. They started again. Let's just breathe. But what do you mean by on chain? Um, and then what do you mean by protecting the network? Explain like how does it work so that we can put it in context.
okay, so when you talk about a blockchain compared to a distributed database, a blockchain is simply a database that is distributed. It's not central. So a major factor, a major element or feature of a database is the fact that there's a client and then there's a server, right? So you have
Mhm.
so many clients getting information on maybe a task they actually want to execute from a single server, right? Now,
Okay.
what blockchain does is blockchain makes every client on that database a server, right? So I don't have to depend on a central party on the network to get
Okay.
information to execute a task. Instead, everybody gossips on the network. If
Okay. Sorry,
something
let me say
happens
that. Okay, so I think I understand you. So I want to say it in like simple English.
okay,
It's
okay.
like simple, simpler English, right? If I get you right. So the same way, like at work, we have a server that everybody points to for
Yeah.
information, right?
Mm-hmm.
What you're saying is that everybody in the office is now a server. So their computer
Exactly.
is now a server. So everybody, so there's no one single server that if the server goes down, everybody will go down.
Exactly. Exactly.
Okay, I understand. Let's go.
Yeah. Yeah.
Sorry for interrupting you, but I needed to
So you're getting it,
break
you're
it down
getting it.
well.
That's fantastic. Yeah. So everybody is a server on the network. So if anything happens on the network, I don't have to depend on just one party. I can easily gossip with the next person on the network to get what the last transaction or the last activity or the last state on the network was. So that's what the whole distributed database technology, which is blockchain, is all about. It's all about a peer-to-peer network where people gossip amongst themselves to get the actual state of the network without depending on a single party. So that's what the whole blockchain thing is all about. Now, the network itself, when you find participants on the network gossiping about activities on that network, right? That network itself is called on-chain, right?
Okay.
A blockchain, a distributed database, right?
Okay.
On chain, because everybody is gossiping on the network. Everyone is online gossiping on the network. Once your node, okay, so participants in this network, clients, servers on this network, participants are called nodes. There
Okay.
are different kind of nodes that perform different kind of functions, but all of them have a basic property or feature of gossiping network activities on the blockchain. All of them have more like an evidence of what the last transaction on the blockchain was. Now, there's a mechanism that makes it possible for everyone, regardless of how many participants we have on the network, to agree on the state of the network, right? Because
Okay.
I mean, the way let me take it back to your example, right? We are all in the office and we're all transmitting information amongst ourselves. Now, the way I perceive information that has happened in the office, which I'm supposed to translate to you, might be different from the way some other person perceives that information,
Okay.
right?
Mm-hmm.
Exactly. It might be the same transaction, but perceived differently. Now, if we were, let me say, 100 of us on the network, we have to agree on a single state, right? You know,
Mm-hmm.
if it's a server, whatever the single server distributes or transmits to the network is law. But then in a distributed database, there's a
There's
mix.
noise.
Yeah. So the transaction I've seen first might not be the same transaction you've seen first. And of course, we have so many people transacting on the network. So it's not just one person. So the transaction one node is able to capture first might be different from the transaction another node is able to capture first. There's a mechanism involved that enables everyone on the network agree on which transaction should come first,
Okay.
right? It's
Okay.
called a consensus mechanism, an agreement mechanism. We are all
Okay.
agreeing together that of all the transactions that have been published on the network, this is the one that will be added to the block first. Yeah.
Okay.
So that's
That's
the
on
basic
chain.
idea. Yeah, that's the
But
basic
the
idea of
question
it.
is, why do you need to agree? So put it in the context of what you said we can use it for, right?
Mhm,
The transfer, right?
mhm.
That's like you said, off chain,
Yeah.
which is what a lot of us, there's part of that that everybody can relate with, and then there's the other part of the trading, which is another side. But the question is, why do we also agree with transaction came first? What
Um,
does that speak to?
it speaks to the value of transactions added to a block. So a blockchain is a distributed database, and the reason why it's
Okay.
called a blockchain is because one activity is built on another activity. One activity is built on another activity. So there has to be a certain threshold when it comes to value of what will be added to the network, right? And
Okay.
so the reason why it is important for us to agree on the quality of what needs to be added to the network is because other blocks will be built on it. Now, there's a
We'll be
theory
built
called
on it.
the
Okay.
theory of the longest chain. Nobody just stands up on the network and say, let's choose this chain against this chain. No. Now, it is based on the fact that everybody agreed on one transaction and it was added to a last chain. It is based on
Okay.
that fact that other transactions will be added to that chain because there are so many chains, there are so many blocks formed on the network,
What do you
right?
mean by chains? Sorry. So
Okay,
I'm
like I
trying to
said,
use, I want you to use like relatable. Why? So I understand the concepts, but this session is to make it so people say, oh, is that what they are doing here? Okay, I
yeah,
understand. That's it. So what is a chain? I understand in terms of the transactions building on each other, but
Mhm.
give me a scenario of what kind of transaction will build on the other. Are you saying like those payments that we are talking about will be added to the chain?
Exactly. So what makes it a
Okay.
chain? What's a chain? A chain links one when you think about a chain, what's the first thing that comes to mind? A link, right?
Okay.
Something that
Mm-hmm.
links one thing to the other. Now,
Okay.
regardless of the fact that everybody gets to gossip about transactions on this network, the network is
Mm-hmm.
not those transactions are not random, right?
Okay.
One adds to the other, adds to the other, adds to the other, and that's what forms a chain. The fact that one transaction can't be added to the network without it being connected to the previous
Previous
transaction, the
ones.
hash function. Now, because I'm talking about the Bitcoin's blockchain right now specifically, because every transaction on the network, right, requires a previous output, which is called a hash from the previous transaction. That's
Okay.
what makes it a chain. That's what links this event to this event. So let me say I wanted to send $10 to you, right? And you had
Mm-hmm.
$0. And after sending $10 to you, okay, let me say I have $100 and I send $10 to you and I'm left with $90. Now,
Mm-hmm.
the blockchain has to record my previous states, showing
Of
I had
100.
$100. Mhm. Now, my $100 chain, my $100 states will be linked to my new states, which is now
Of
$90, which
90.
goes,
Okay.
yeah,
And then
yeah,
a $10 link to the other person.
exactly.
Ah,
Links
we
to
understand. We understand.
exactly. So
But why
if
did they
if
make
you
it
send
sound
your
like it's
$10,
Greek?
no, 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 it's not. So if you send your, let me say if you send $5 out of your $10 to someone else, now that transaction that had me send you $10 will be your
Mm-hmm.
foundational block, and then
Okay.
your $5 sent to someone else will be linked to the previous transaction, which is the evidence that you actually had $10 in your account that you could spend out. You
Okay.
get.
Okay. I
So
think
it's a
I
story
think
of
that makes
evidence.
sense.
Yeah, the
Yes,
chain is more
that
like
makes sense.
what gives it evidence, right? That okay, this person
This
is
thing
spending from
happened.
something they had, right? Yeah. So that's the idea about the blockchain.
Okay, fantastic. Olufisayo Basi. Hi, I see you. Hi, Ayobami. Hi, Jennifer.
Hi.
Um, Somebody's okay, LinkedIn user. I'm not sure how to get your name to show, but it'll be great if you can show your name, except you made it anonymous, I believe. But then you know who I'm referring to, you know yourself. But then Olufisara, you are asking what is the nature of the transaction. Can you please like write a fuller sentence so that we can give you an answer? Because that's what this session is for.
Okay.
Then I'll go on to another question, right? And it's a very sincere question. Why do people always lose money on cryptocurrency? So I think that question is broader than just why do people lose money, right?
Mhm.
Let's talk about the trading aspect of crypto, right? Because I don't know. So I hear you talk about crypto as a store of value when you're talking about making payments, right?
Mhm.
As and a means of transfer of value
Yeah.
when you're
Mhm.
making payments. But there's also a part where crypto is seen as a tradable instrument, right? First of all, what's your take on that, your personal take? And then tell us about that whole trading side of things, because that's what I've met. Two types of people. Some people that are like, oh, people are making money here, even though a lot more people lose money. Or people are making money here. That's what I want to get into. And then there are people that every time they hear crypto is lost, they're like, I don't want to hear crypto at all. Right. But let's talk about that trading side of things, right? How does it really work? Have you made money trading? Just give us gist because you are the one in that space.
Yes. So when I came into crypto in 2016, I did a lot of trading initially, and I lost a lot of money, a ton of money. Now, it's easy to lose money in the crypto markets based on my experience because of two major factors. Now, the market is not really as liquid as other tradable markets like the financial markets, the capital markets. We don't have so much money in crypto. So it's very easy for few persons to manipulate the market, right?
Hmm.
It counts, it goes a long way to explain why the market is so volatile because two or three or four or five big whales can easily move the market. The market is that small and it's so easy, right, to move.
Mm-hmm.
And that's why people find the crypto market really attractive, because of that volatility. You get to make a lot of upside. Someone can make as high as 10, 20, 30%, you know, 40, 50, depending on what kind of crypto you're trading on. There are some cryptos that probably have maybe $200,000 in daily volume. What do you expect from that kind of crypto? A lot of price movement,
Volatility.
a whole lot. And it's probably just one whale. Okay, a whale is someone who has like a chunk of capital that's based on his or her activities or trades on that particular asset. That person's
Can
activities
sway.
significantly move the market. So you see an asset with, let me say, $200,000 or even $1 million worth of trading volume. What do you expect? A lot of price movement, right? So the reason why people trade crypto is because compared to other traditional markets, the market is highly liquid, meaning we don't have so much money in the market. And due to that effect, it's very volatile, right? So you could make a lot of upsides in a day and a considerable amount of downsides in a day as well. But trading is not as rosy as it seems. Like we all know, we've all lost. Majority of us who are in cryptos have all been beaten by trading, right? And I don't think it's anything special to lose money in crypto, don't get me wrong, but I feel even in trading stocks, people lose money, right? The only thing is we are seeing a lot of that intensity with crypto because crypto is a highly illiquid market. There's literally little or no money, even in cryptocurrencies like Bitcoin, right? We have some major account holders over a long period of time. Let me say, I think it's about 20 to 30% of the the amount of Bitcoin wallet addresses who hold at least 80% of Bitcoin's present circulating supply. So what do you
Mhm.
expect?
They can move
Any
the market.
activity, yeah, once any of those wallet addresses holding a large amount of Bitcoin decide to move Bitcoin today, it will definitely shake the market. If they decide to move Bitcoin into centralized exchanges today, it will definitely it will definitely shake the market, because people will panic and say, oh, one of those big wallet addresses has moved money, so they'll definitely dump some Bitcoins. And market price actions will definitely happen. So I think it's a normal phenomenon to lose money in any markets. I mean, it's common in the stock market, and the crypto market is not an exception. But I'm saying the reason why we are seeing an intensity when it comes to
Cost of
volatility,
illiquidity.
yeah, it's not so liquid. It's not so liquid.
Fantastic.
The whole
Fantastic.
crypto market is about, the whole global market cap for the crypto market is about 2 trillion. It's on an average of 2 trillion, and it has been that way for, like, I think, close to a year now. Back in 2016, 2017, it was on an average of 400 to 500
Hmm.
billion US dollars. That's not a lot of money if you want to compare it to global,
To the stock
stock
market or
market.
the debt
Yeah,
market.
it's
Yes,
not.
yes.
It's not a
I
lot of
love
money.
that. I love that. And that's very, 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 very apt. Because the reality is that the depth of the market makes a difference. So I'm a fixed
Mhm.
income trader, right? There was a time in the market when I was actually a trader on the desk that there are some particular bills that, because of the data we have and we know that it's illiquid, all you just need to do is, if I have cash, just pick that bill and keep
Exactly.
buying. And keep
Exactly.
buying. You know that people will
Exactly.
scamper because nobody has it.
Exactly.
And that's
Exactly.
just it.
Hmm.
You know that people will scamper because nobody has it. And so
Hmm.
that's literally what's happening. But then okay, someone, okay, let's respond to Olufisayo. She expanded on what she was asking. She was saying, you refer to transactions that, would that be the buying and selling of crypto units? No, the transaction you were referring to, I believe it was the what's it called, transfer of funds. Is
Hmm.
that what you were referring to? So where
Hmm.
does the buying and selling of crypto units come in terms of that chain? Maybe you can explain it from that angle to us.
If you're buying or selling crypto, you can,
Mm-hmm.
based on the amount of innovation happening in the space right now, you
Mm-hmm.
don't really need to trade. That is, buy or sell your cryptos on centralized exchanges only, right? There are
Mm-hmm.
people who actually buy or sell their crypto depending on what asset they actually want to buy or sell. on chain
Oh.
directly. And that is made possible through decentralized exchanges. So there are centralized exchanges like Binance, Huobi, OKX, Bitfinex, and the rest. And then there are decentralized exchanges like Uniswap. So those ones are simply protocols built on the blockchain. There are applications. Let me try and bring it to LE5 now. There are applications built on the blockchain that govern the interaction between a buyer and a seller. So if I want to sell my Bitcoin, for example, all I have to do is to interact with an application on the blockchain that specializes in facilitating trade between a buyer and a seller, right? That's what a
Mm-hmm.
decentralized exchange is. It's an application built on the blockchain specifically to facilitate transactions between buyers and sellers. So what happens is people who want to earn extra yield, and this is where the question where you ask, are there other things I can do with my crypto apart from trading will come in, right? You can actually contribute your crypto into a decentralized exchange, right? A pool. You know how centralized exchanges have central order books. And so when buyers and sellers trade
Mm-hmm.
on those other books, their trades are immediately settled by that pool. That pool is
Okay.
centrally managed by Binance, for example,
Mm-hmm.
centralized exchange. But for a decentralized exchange, there's no single pool managed by a
So
single
it's like
individual.
peer to peer, sort of.
Exactly. So what happens is, let me say, for example, if me and you want to contribute to a pool for a decentralized exchange, a decentralized application that specializes in facilitating trade between buyers and sellers, all we have to do is contribute, let me say, Bitcoin or assets, depending on that pool. Let me say that application wants to facilitate trade between Bitcoin buyers and sellers, as in BTC,
Okay.
people who want to buy and sell now. And I have BTC, you have BTC. So what we do is we deposit our BTCs into pools. They call it liquidity pools, managed by this protocol, kind of. So it's not really managed by the protocol per se. The protocol only governs the relationship between every participant that
So,
relates
but
to
it's
that.
still, it's almost like still P to P. Don't worry, guys.
Exactly.
I'm going to explain it again in simple English. Don't worry. Let us finish.
Exactly. It's pure P2P, right?
Mm-hmm.
That technology is made possible with a very flexible function in blockchains they call smart contracts, right? So
Mm-hmm.
it's a contract that governs the relationship between two parties, right? So
Okay.
what that application is doing is governing the relationship
Making
between
sure that
the
everybody aligns
buyers,
with the
and
smart contract.
everybody gets their thing.
Okay, okay, guys, let me explain it in simple English before you go far. So you are saying that there are two things, and let me explain what a centralized exchange is. So, for example, think of the stock exchange that we have right now. It's a centralized exchange. If I
Mhm.
want to buy a stock, right, and I have an app, like many of these stockbroking apps, right? What I do is I say I want to buy Apple, or I want to buy, so Apple is listed on maybe New York Stock Exchange or GTB on the Nigerian Stock Exchange, right? I'll put in a bid at 10 naira or $10 or whatever the value is. Now, what happens is that the exchange looks for someone who is on the other side of the trade, who wants to sell at the same price and crosses both of us, right? That's what the exchange does, and that's what Binance does for crypto, because
Mhm.
Binance is the one that is quite popular. What other
Yeah.
names are like Binance for us,
There's
so that
OKEX,
people can relate?
there's Huobi, there's Bitfinex, there's Poloniex.
Okay.
There are so many.
There are so many. So that's what
Yeah.
they do. So now that's the centralized exchange. And there's now the decentralized one where all that happens is like there is a regulator and there is a contract. And
Mm-hmm.
people are doing your madness. Make sure that you don't cross the line of this contract.
Exactly.
That's all that
In
is
fact,
happening there
you can't participate with that application if you don't abide by the rules of the contract.
of
You
the
can't.
contract.
Yeah. So it's
Okay.
the contract
Now,
that tells you you're qualified to buy from here because you fulfill these conditions. It's the contract that tells you you're qualified to sell from here because you fulfill these
because you
conditions.
fulfill these
Now there's,
conditions.
yeah, the central order books we have in central exchanges, right?
Mhm.
An equivalent to that on a decentralized exchange is a liquidity pool.
Is the pool, you
So
said so.
yeah,
Okay.
Exactly. So people like me and you who probably who have BTC stashed up somewhere in our exchange wallet might decide to contribute to deposit our BTCs in these liquidity pools. So what we do
Mhm.
is we provide a pool for the settlement of transactions between both parties for this application. And then we
Okay.
earn fees, transaction fees.
Oh,
Now, yeah,
nice.
for
Okay,
Binance,
wait, that's a good way to make money. Okay, okay. Are you
for
guys
Binance,
hearing? Okay, go
for
ahead.
Binance, they are the ones who provide these central order books. They are the
And
ones
they
who
are holding
provide the
your
central
assets.
liquidity. And so when you trade with Binance, there's a percentage deducted from all your trades, which serve as trading fees that go to Binance.
Okay,
But in a
okay.
decentralized exchange, these trading fees are shared by people who pulled money into this pool,
Into this. Okay, so
which is
that's
me and
another way
you.
to make money.
Yes, it is.
Fantastic. I think that's very good. So from what I've heard, apart from actually holding the bitcoins and the
Yeah.
value going up or down, another way, if you believe, because I gave an introduction like at the start where I talked about how how the markets have evolved over time, how we started from trade by barter and we
Mm-hmm.
moved to paper money, and now we're going to digital currency. So whether or not you are cool, this is where we are going. If you are so sure that tech is the future, understand that technical money, technology money is part of that future, right? So if you decide that okay, I want to hold some bitcoins, she has just mentioned how you can make money from it without actually trading. Meaning that if you have a buy and hold strategy, you can do that. Now, I don't want to go into how, except if somebody
There's
asks.
some there's some level of technical know-how you should know to be able to do that, right? So it's
It
always
sounded a little
advisable for
okay.
it's always
Go ahead.
advisable for newbies to participate alongside with centralized exchanges. So now it's
Okay.
funny because even centralized exchanges have seen that decentralized exchanges might actually be major competitors with them in that market, right? So what they
Mm-hmm.
do is they also contribute to decentralized exchanges. They contribute
Oh, with the excess that you
and
have
then they also make
money,
liquidity
but did they
provider.
transfer anybody to the people that contributed to it on their exchange? No,
Not
it's
at
part
all.
of their
So
profit.
yeah. So as a layman, you can as well contribute to pools. Binance has some earning products like that on your applications. So you can
Okay.
contribute to pools like that, right? So what they do is they aggregate people who are interested in providing
Okay.
liquidity. They take away the smart contract security risk from you,
Okay.
right?
Okay.
So that's why of course you won't expect to earn as high as you would have earned if you had
If you were
interacted
taking
with
the
the
risk
application
yourselves.
directly. Yeah. So they take away
I
that
have.
risk burden from you. And then instead of your money just sitting idle in your Binance accounts, once you have subscribed to any of Binance earn products within the applications, you also earn extra yields on your crypto
On
for
your
providing
computer.
liquidity somewhere through Binance in any
Okay.
of these
Fantastic.
applications through Binance. So
Fantastic.
you could just
Fantastic.
take advantage of that as well instead of having to
Okay.
interact
To do
directly.
all the technology
Yeah,
stairs. Okay, okay, that's a
yes.
low hanging fruit. And we need to talk about Binance because there's been some issue about it in the news recently. But let's answer Tosin Oluyemi. He asked, my question is, at what point does blockchain create a cryptocurrency?
Okay, so blockchain technology is not really all about cryptocurrency. Cryptocurrency is just a single use case for blockchain technology. We have other industries experimenting on how to use it effectively, to cut costs and efficiency and all. So cryptocurrency is just a use case. Not every blockchain is built to create cryptocurrency. So that's the point I'm trying to make. They are industry graded blockchains that are created to facilitate or increase productive efficiency in those industries that do not require cryptocurrencies. But then in the public space, for what we already know as what's popular amongst us, is the use case of blockchains used in creating cryptocurrencies. And so, coming down to your question, at what point does a blockchain create a cryptocurrency? Based on that technology, as long as you're able to, they're actually back end applications. You can connect to a blockchain that has all the structural layers you need to tick off before a cryptocurrency can be minted. Now, the procedure for minting cryptocurrencies on blockchains differ. The procedure for minting cryptocurrencies on Ethereum is it's similar, but there's a lot of difference compared to minting cryptocurrencies on Bitcoin. Bitcoin has a novel mechanism, and before a crypto on Bitcoin is minted, miners have to solve some very very complex mathematical puzzles before a Bitcoin is minted. It used to be the same thing with Ethereum, but based on the innovation we've seen in the space over time, we have seen that process or method of creating cryptocurrencies differ per blockchain or per chains. So it might be a different way of creating cryptocurrencies on Ethereum and a different way on Avalanche, which is another blockchain, and a different way on Solana. Before a crypto is created on Bitcoin's blockchain, a group of miners have to compete together, right, to solve a mathematical puzzle. Whoever wins the puzzle is able to unlock a reward. That reward is a minted blockchain. On Ethereum, we
Mm.
used to have that same thing happen where miners compute on mathematical puzzles, and then whoever wins that puzzle gets a reward, which is an Ethereum. But Ethereum is gradually migrating into a new method of creating cryptocurrencies, which is where we have um they call it a proof of stake mechanism, where instead of you having to solve mathematical puzzles, all you have to do is deposit a stake on the network to secure the network, right? There's a mechanism that controls who is randomly selected to solve a question on the network, right? It's a totally different mechanism from staking because you don't have to use a lot of energy to solve
Mm.
mathematical puzzles before earning crypto. No, all you have to do is deposit a stake on the network, and then based on some random mechanism, someone on the network is chosen to probably what they call it, um, uh, execute a transaction on the blockchain. And once you're the lucky winner who amongst everybody who have deposited stake on the blockchain has been chosen to validate that transaction, you would also be given
You
the
get
right to add a block, right? And then you would get a reward, staking reward, for that part of crypto you had deposited to participate in securing the network and validating or executing or confirming transactions on the network. You'll get a reward in Ethereum. So there are a
mm.
lot of different
Different
mechanisms. Proof of
ways.
stake, yeah. There's proof of stake,
Fantastic.
there's proof of work, there's proof of history, different mechanisms involved,
For
right?
different, yeah.
Yeah, for
But then
different
correct
blockchains.
me if I'm wrong, right? What you are saying is that each blockchain has an initial definition of what it is for, meaning that
Mhm.
the Bitcoin blockchain is a cryptocurrency blockchain.
Yes,
Is that
yes,
what it
it is.
means?
Mhm. Yeah.
So meaning that the end game of that, so meaning that from the start, when you are starting the blockchain, you know that it is a cryptocurrency you are creating. And some other people that are creating blockchain for something else know that, okay, this is not a crypto blockchain we are creating. So somewhere embedded in the life of it is that this is a cryptocurrency. However, we decide as our rule to create a new unit, but
Mhm.
this one is a cryptocurrency from the start. Is that what it
You can
means?
actually exactly. You can actually create a blockchain. What I'm trying to say is cryptocurrency shouldn't be tied in any way to blockchain
To
technology.
blockchain.
It's
Okay.
just a subset of what the technology can do. We actually have blockchains today that are basically created to scale legacy blockchains. And some of those blockchains don't have a native token yet.
A native, okay, native to do. Okay.
A native
Okay.
cryptocurrency yet.
Okay.
Yes.
Okay. Okay.
So
Okay.
people are able to use it for their use case, which is to easily transfer crypto without having to pay, outrageous gas fees on Ethereum. People are using it for its intended use case, but it doesn't have a cryptocurrency yet.
Okay. Fantastic. Yet.
Mm.
Yet. Okay. So Otte has a question. I would like to understand ICO offering.
Okay, so that was really popular in 2017, 2016, 2018. It's trying to see how I can break it down to early five.
What is
Um
ICO first?
ICO, initial coin offering.
Okay. Okay. Initial coin offering.
Yeah.
Okay.
So a lot of projects back then in 2016, because it was really, really popular back then, a lot of projects used it as a kind of crowdfunding mechanism to raise funds for their projects, right?
Mhm.
So what happens is a project comes out with its white paper, its roadmap, everything they say they want to do, and then they say, okay, governing their projects, they are going to be releasing an amount of tokens, cryptocurrency tokens that will govern whatever it is they are building. So they actually need money to build their project, and the only way they feel retail users can actually participate or gain some form of upside
Stake in
potential
it.
in whatever
Yeah.
it is they're building is by giving them capital to build whatever it is they're building. And so that's where ICO offerings come in, right?
Mm-hmm.
ICO events come in. So they create ICOs where people come in to probably deposit Ethereum or Bitcoin with them in exchange for their tokens and an allocation of their tokens, at a lower price, because they believe whatever it is they are building has sufficient upside potential, to increase the value of their crypto exponentially over time. And then you get to make money when you sell their crypto. So let's say, for example, the Bitcoin project, or let me not use Bitcoin, the Spoon Coin project, in quotes, they want to raise funds to start their project. And so they start releasing white papers, roadmaps. It's a very popular, those are actually popular, um, should I say, public materials. Crypto projects prefer sharing to their public audience compared to
Mm-hmm.
traditional investments and startups and businesses, where you get to probably do road shows and seek for funding from venture capitalists and angel investors and all whatnot. So it's totally different with crypto. So they show you roadmaps, white paper stuff, and they tell you invest in Spooncoin at we'll sell our Spooncoin tokens to you at 0.15 per Spooncoin. And then in the next 2-3 years, when we have built Spooncoin and Spooncoin has some sort of value in quotes, you can actually
You will be
sell your
getting 2,000
you can
two
sell
thousand
your
dollars for your
Spooncoin
one
tokens.
naira.
You sell your Spooncoin tokens for $100 per Spooncoin, $50 per Spooncoin. So that's the basic idea behind ICOs. Although ICOs have really evolved over time, because of a lot of regulatory question marks they've had, surrounding their notions. So what you see right now is a lot of variants. You see initial exchange offerings where projects decide to lead directly on centralized exchanges to give retail investors some form of, I don't know, confidence per se.
Buying. Okay. Mm-hmm.
Yeah, based on a unilateral vote of confidence from these centralized exchanges that, okay, this thing is actually legit, you can invest, sort of. Because Binance, for example, will host an initial exchange offering for a project, and a lot of people will rush to get that project. Why? Because Binance is the one promoting the project, right? They're like, you know what, this project is good, you can invest in it, their technology is novel. Sometimes Binance will even publish, let's say, a small preamble or some small investment summary on this project, trying to educate people on why, so people kind of have some level of confidence investing in initial exchange offerings these days compared to ICOs. You have IDOs as well. So these decentralized exchanges too also hosts crowdfunding opportunities for projects. So if you don't want to go through an IEO, because maybe the exchange, maybe Binance is saying, the cost you're going to give us for facilitating this crowdfunding process is this, and you feel, okay, I don't want to spend that much, you could go through IDOs, decentralized exchanges, applications built on these blockchains directly, and raise funds for your project. So that's the variant we've seen over
That's
time.
very fantastic. Fantastic. Thank you. Um, so there's another question from Chinyere Onuma. Hi, Chichi. Hello. What are the best platforms to trade on? So I think at this point we'll also talk about Binance, because especially if, so first of all, just list the different platforms, because I mean this is going to be hosted on YouTube and people can be watching from everywhere. Not everyone has to, because I mean Binance is like the most popular one in
There.
Nigeria, but let's not restrict ourselves. So just give like maybe five notable ones that people can trade on. Sorry, there's something in my eye. Five notable ones that people can trade on. Then we'll now also talk about Binance because there's been some issues around them right now in the news, especially with respect to Nigerians. And if you have IP address issues like the average Nigerian, please listen up for this. So just tell us like the five platforms we can trade on, and then we'll talk about Binance next. Okay.
So as of today, the top exchange platforms you can also trade on. You have KuCoin, you have Bitfinex, you have OKEX, you have Huobi. Now the problem with a lot of these statistics is because of how volatile the market is, it even affects um, the volume of transactions on these centralized exchanges. So I'll say you go to CoinMarketCap. There's a place on CoinMarketCap where you can easily check top exchanges for that day.
Sorry, say
You
that
click
again.
on
www dot
CoinMarketCap.
coin
Echo.
market
Mm-hmm.
marketcap.com, right?
Mm-hmm.
I'll type it in the comments.
There's
Okay,
another
go ahead.
one,
Mm-hmm.
CoinGecko, right? So if you're navigating through
www.
those websites, you should definitely see information on top crypto exchanges by transaction volumes,
Sorry,
right?
one second.
So there are
CoinGecko.
actually some
Sorry.
exchanges that have consistently been in top five for a while, but
Okay.
that list tends to vary, right? So I always like taking that particular list into consideration because I mean, an exchange might be really liquid today in terms of transaction value by volume,
Mm,
might not be liquid tomorrow. So I
okay.
think it's always good
Sorry,
for you to
sorry,
check that
sorry.
statistic too.
Can you hear me? Sorry. CoinGecko, please spell Gheckko. Uh-huh.
CoinGecko.
Gecko. Okay. CKO. I'm putting it in the comment section so people can see. Okay. So you were saying you like to check them
Mhm. So even if I
because
tell you,
things can change.
yeah,
Okay.
even if I
So
tell
that
you the top centralized exchanges by volume globally are Binance, OKEX, Bitfinex, Huobi. I'm trying to say it's not constant, like it's not consistent over time. Sometimes based on transaction value and volume, their positions may vary. So always
okay.
keep that link, yeah, always keep that list in mind. Anytime you want to check, top exchanges, you can
And do some
always invest
research.
in, yeah, alternatively.
Fantastic.
Binance.
Fantastic. So let's talk about Binance, right? For people, this is specifically for people in Nigeria. There's been a lot of clampdown. Personally, in my own experience, Binance is very, very tough to navigate or very confusing to
Wow.
navigate.
I'll say it's the easiest to navigate,
Maybe
trust
they are
me.
all harder.
Some exchanges
You know,
are worse.
your brain is special. You see how you're dishing out these things off the top of your head. So maybe your brain is
Some
special.
exchanges
But
are worse, trust me.
okay, okay. So we've had a lot of clampdown. Maybe people's accounts have been frozen, stuff like that. The truth about it is, as much as these people claim innocence, which is possible, there might be
Yeah,
some things that they are doing that is triggering because it's algorithms. Let's not take it personal.
that's the
Let's
truth.
you guys. Nobody's really sitting down to look at you. Yeah, as long as you are doing what should be done and you're not raising your head beyond the average, you probably will not get noticed by the computer, right? So how do people really manage their accounts? And then I mean after that we'll discuss also the whole Nigerian situation because there's some K-leg there, right? But how do we what do you think when you read these things from an experience or a professional point of view, what do you really think they are doing wrong?
Well, I think a trigger would have been the fact that a lot of people had to resort to using VPN to access Twitter. So
Hmm.
I have been in that situation before where I used VPN to access Twitter as a result of the Twitter ban in, I think, July, September last year. And anytime I tried to, like, I totally forgot I was probably using a VPN that had indicated I was in a different, geographical region. And then it's just a swipe on my phone. I tried to access my Binance and I'm kicked out, right? There have been
Mhm.
instances like that. I get kicked out immediately saying Binance Global is not accessed in this region, right? Or they're actually telling you there's a red flag. You shouldn't be accessing your Binance wallet from this region, right? So I think it's possible a trigger would have been the fact that a lot of people, had to switch between using VPNs, and a lot of people were hosting their geographical locations in other places,
Random places.
yeah, compared to where they were actually in. Once you're doing that, you're sending a red flag to Binance, naturally, and they'll kick you out. So if you get kicked out for, let me say, a considerable period of time, it's possible your account will get flagged, right? It's possible. So I think because it's not really an experience I've had that much, times when I got kicked out, I had to retrace my steps because I mean my money is in there. And I think I even deleted the VPN because I noticed I got so used to accessing my Binance wallet every time I was on VPN. And it just looked like a reflex solution to my problem was to delete my VPNs. So I think anything that will probably compromise your present IP where you are at the moment will definitely affect how you interact with your Binance application.
Okay.
Yeah. So I think that's
Okay.
that's a major standout for
Major
me.
thing
Anything that will compromise your IP, your
that makes
geographical,
you look shaky. Mm.
anything at all. Yeah, yeah. They will definitely have to flag that up. They will definitely have to flag that up.
Okay. Okay. Fantastic. And then another question, right? And I think maybe I should be the one to speak to this. The truth about it is that Nigerian government has put like a flag on local accounts that are seen to trade
Mm-hmm.
what's it called?
Crypto,
Cryptocurrency.
yeah,
Now
true.
the truth now I agree that let's not lie to ourselves. A lot of people started using crypto to buy dollar. Let's not lie to ourselves. Beyond the what's it called? Beyond the normal use, do you get it? I know that people at some point would log on to Binance, use their naira, um, buy crypto, sell it, get the dollar, and wire it to their dom account. And so we're round tripping. And so the regulators
But
have a yeah.
sure.
I know people that did not were not interested in crypto but went that route. Then all the P2Ps,
Okay, you,
when
you
you
really
get
can't
you now
wire
get
you really can't
yeah.
wire crypto dollars to your DOM accounts.
No, convert it, so sell it to actual USD. So they're
Oh,
actually getting
oh.
actual USD. Yeah.
Nigerians are
I mean, because I mean, crypto is traded against
mm,
USD,
mm,
as in
mm, mm,
actual
mm,
USD,
mm,
right? So you
mm.
can't blame the regulators, right? Because as much as it doesn't pay us as individuals, the responsibility of the central bank is to defend the currency. Now, so you have to be careful, right? You have to also err on the side of caution, especially if you are in Nigeria, and how you play around with these things. Because if the regulator comes for you, they
Against
have a
you.
case, and so you decide on what you want to do compared to the value that you are getting for it. That's one. The second thing I want to ask you, which I'm going to throw back to you, is there's something around how if you buy a coin, you don't have to leave it in an exchange, you can move it to a secure location. Please talk to us about that.
Okay, so the fact is, when you buy cryptocurrencies on centralized exchanges, right, you have literally no access to your private keys, right? Your money is hosted on a hot wallet, a wallet that's online. And worst of all, the wallet is not even in your control, right? So it's always more advisable, especially when you want to buy cryptos to store, on a long term, to store your cryptos in your private wallets. Because if tomorrow Binance gets hacked, it's not your keys, it's not your money. Your money in Binance is solely within the purview of Binance. It's in Binance's wallet, kind of per se,
Mhm.
not your wallet, right? They own the private key. So what they do is they provide a simple user interface for you to interact with those funds. But those funds are actually in their wallets, in their hot wallets, right? They just show you, okay, out of all the money we have in our wallets, this is your, like, based
Your own
on
stake.
interface, you say, hey, this one belongs to you per se. But the truth is, if Binance gets hacked today and they get to lose a lot of money, you might likely lose money as well because you don't have access to that money. It's all in a single, wallet system managed by Binance. But then if you withdraw your crypto from Binance and then you send it to a private wallet, like let me say Trust Wallets, my favorites, Ledger Wallets, right? Ledger Nanos. It's more like a hard drive form. It looks like a hard drive form, but it's a wallet
Mhm.
as well, a cold storage wallet, right? So if you store your cryptos there, you're reducing the risk of leaving your cryptos in the hand of a third party like Binance, right? The crypto
But
is
you must
solely
not
in
lose your keys.
no, no, no. You must not lose your keys. Absolutely. And it's beautiful because you can always access your private keys. You can always access your wallet through your private keys on other wallets. So all you have to do is import your seed phrase, which to make it easier for end users to understand. It's a cryptographic function, but to
Hmm.
make it easier, they
To
have
make
been
it
able
use
to
that is a cryptography. That is
no, no, no.
not taking it hard.
They converted it to seed phrase. So trust me, that's not the raw form. They converted it
Okay.
to seed phrase, like simple words, 12 simple words that people can easily write out, right? So that
Okay.
seed phrase will give you access to your wallet if it's imported to another cryptocurrency
Another
wallet.
exchange.
Yeah,
Yeah.
that's because those private wallets don't necessarily, no, they don't host your crypto. Your crypto is hosted on the blockchain. Your private keys are are your proof or evidence that you're the owner of that crypto on the blockchain. That your crypto is not really in your hand per se. It's in your hand, but that crypto on the blockchain cannot be moved without your private key.
So you
So
are the
what
only one that has access to it. So nobody can
yes,
hack, nobody can
nobody
steal
can
it
move. Yeah.
without
Well,
your
if you're
keys.
careless with it, if you have your seed phrase, stored carelessly randomly on your email address or your WhatsApp or Telegram, anywhere online, if you're careless with it, hackers can always find it.
Get
It
it.
can always get
Okay.
compromised, right? So it's always advisable for you to, like what I do, I write my seed phrases like everywhere, like on my jotters, places I can, it's more like a valuable. So I even write it where I keep some of my certificates as well, right? So because those private keys give you access to move that crypto on the blockchain. Once you've lost the private key, there's nothing a wallet provider can do for you because they don't have access to that private key. They only provide
Okay.
an interface, yeah, an easy interface that a layman like me and you can understand to say, okay, let's do
See,
this. Yeah, this is how
just
we
put in
can
the
move.
key and have access, and this is your
Yeah,
balance. Okay.
yeah. So
So,
yeah,
so,
so
so Jide has a comment. Hi. Hi,
okay,
Jide. He says the protocol is a decentralized. He was explaining. He's a tech guy. I know him
okay.
personally. That's why he's using big English here. But we see the protocol is a decentralized autonomous organization and is an algorithm that governs how electronic contracts are executed between trading entities. Yes, yes.
Is it the question is asking or
No, I think he was commenting on when you were speaking, you were explaining the whole decentralized blah 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 blah. So he wrote that there. Then Iblala, hi Iblala, she's asking, can you share the process for
add a
getting
small note
out of the pool
to add a small
in the
note to I think the last person's
okay,
addition.
okay,
Thank you so much for that
mm-hmm.
addition. Protocol is a thank you so much. But then most times decentralized exchanges do not start as DAOs. Like Uniswap, for example, it started as a simple smart contract application on the blockchain that could facilitate trades before buyers and sellers. I think it took more like close to a year before they decided to, create governance token and a DAO for Uniswap. So let's kind of not confuse a basic smart contract application built on the blockchain for a DAO. So what I'm trying to say is there are smart contracts that are built for specific functions on the blockchains that are not governed by DAO. Most times, what we see in the ecosystem are we see projects building smart contracts, and so everything that has to do with mechanisms of how that protocol works will be managed by the project for a period of time, and then they gradually phase it into a DAO. So they hand over the right to govern key parameters of that protocol to the community through a DAO. So a DAO is more like a tool for managing some of these smart contract applications, for running them independently without it looking like it's being run by, government or a central institution. So
Central
what I'm saying is,
organization.
what I'm saying is a smart contract can actually exist without a DAO. So a DAO is more like a tool for governing that smart contract. Thank you
Okay,
so much for that.
fantastic. Fantastic. So this is Ibila. She's asking, can you share the process for getting out of the pool in a DAO? Are there any unique conditions attached? Now, these are techie people. Just know this one. I know her. She's an engineer. She has the brain for this. Go ahead.
Okay, so it's actually a basic process, right? The same way you deposit money in a pool and you're earning liquidity provider rewards, that's transaction fees for providing liquidity. Once you're done, all you have to do is unlock from that pool whatever it is you deposited. There are different types of liquidity pools. You have single liquidity pools, you have double liquidity pools, you have multiple liquidity pools. If maybe you provided liquidity for a single pool, let me say a single Bitcoin pool in quotes, theoretically, right? The easiest way, it's very easy. Once you know you want to exit a pool, all you have to do is go on the interface where you had deposited money. The interface is just more like the front end. For the back end, which involves you depositing money into the pools, all you have to do is go back to the front end, choose unlock. It depends on what terminology the project decides to use on the user interface. Choose unlock, choose on stake, choose anything that shows you. It's just a button, it's just a tab. Just click on the tab, it will unlock your tokens. Some projects tell you you can't unlock your tokens without, let me say, a 7-day period, a 3-day period, a 4-day period, to ensure smooth running of the pool. In that sense, all you have to do is follow the procedures laid down. It's procedures, it's project specific, right? All you have to do is click on the tab, click on lock. If it takes 7 days, you'll probably run out for 7 days and your money is released into your account and you stop earning liquidity fees because you no longer provide liquidity for that pool. So it's just a simple tap function on the UI. The
Okay.
same way you
So
can stake with that tap function is the same way you can unstake. So
okay. So I think I understand what this is. So this is talking about the decentralized system that you talked about, where how as an additional way for people to make money off their cryptos while they are holding it. And so her question, because I didn't understand her question, I just put it up for you. But now I think I understand her question because of your answer. So
mhm.
if I get it right, if and then you also had said that it's a technical process, right? And you recommended doing like a Binance or Co or so
Just go through a
for it.
centralized
But
card.
well, obviously she's a techie person, right? So for the so what she was asking was if I give them that loan when I'm tired, how do I collect my
For example,
my
just go to Uniswap. Uniswap is a very popular, sorry, decentralized exchange built
okay,
on the Ethereum blockchain. Go to Uniswap's
okay.
interface, provide liquidity. The only reason why it's probably not a popular choice right now is because if you're providing liquidity on Uniswap directly on Ethereum, you're going to pay a lot of gas fees. So now the thing with smart contract is for every smart contract function, you have to pay gas fees in Ethereum, right? For every function executed on the blockchain as a smart contract. So the more complex the function, the higher the gas fees, right? So there are other ways you can provide liquidity on Uniswap. You can provide liquidity on Uniswap through L2 scaling solutions. Just go to Uniswap's website, right? And say you want to provide liquidity. Connect
So
your
that's
Ethereum
so what is
wallet.
that?
Uniswap. There's
uniswap.com, right?
Uniswap, there are other decentralized exchanges as well on different blockchains. On
Okay.
Solana, you have Serum, you have Radium, you know, you can provide liquidity on them. You have Orca, you have Saber. There are so many.
But you guys can see how hot this baby is. Like, can you see how her head, like, it's just still
I'm
like
just
this,
a
like this.
layman, no. I'm just a layman.
You can see that she's on fire, right? Serious fire. But so we're coming to the end of this. I mean, we've actually like overshot by like 10 minutes.
I
In
hope I've been
fact, I
able
was
to
thinking maybe
answer her question.
I believe you have. I
Yeah, the
believe you
same way
have
you
answered that.
provide liquidity through the
It
user
is
interface of this project is the same way you can unstake
go
on,
back. Yeah.
yeah, just through a click of a tab or a button and you're unlocked
Okay.
and your money goes back to your wallet and it's fine.
Okay. So yeah, if you have any other questions, please, this is the time to throw it in so we can pull them all together. Jide, I think, has a comment here. Blockchains have a unit called tokens. Some tokens are called currencies because they are demand there is a demand for them and are such a medium of exchange. Blockchain maintainers are usually paid in tokens. That's correct, right? So
Mhm.
thank you. Thank you, Jide, for sharing. Um Baba Femi was asking for your full name. I told him JenniferOvat. I know you have two names.
Jennifer Oobem on LinkedIn.
Okay, Jennifer Obem. Okay.
Yeah.
So we'll write it out there. Then Jide is actually a very major contributor. Thank you, Jide. He was actually my boss, my first job. Most bank accounts clamped down as a result of the volume of trades executed by some traders. They may need to provide additional KYC to their banks. I don't think it's
Oh,
about volume of trade though. I think
okay.
sometimes it's about the somehow them flagging your accounts. Something must shall make them notice, right?
Mm,
Right?
I
Something
agree.
must,
I
because I
agree.
mean, to a very large extent, they can't be going to chase people one by one. And sometimes CBN picks people. When I say people, if your name comes out in the data of the returns that a bank sends, and CBN randomly says, okay, what is this thing? And then it happens that it's crypto. That's how
And
it
I don't
happens
even know. I
also.
don't know if this thing was a rumor because I'm not really so involved in the local landscape of cryptos because it's really basic too. But I don't know if it was a rumor. But I heard there was a time where CBN people like right were creating P2P accounts on
Sounds to find
Binance. Right.
people.
So once you want to buy crypto, I don't know if it's true, but I got to hear from a lot of my friends, right, that their accounts got flagged because some CBN people, actually used some code to send money to them through the P2P trade, and then their accounts got flagged. So if that is in any case true, we might really need to use, a higher level of caution when dealing on these exchanges so we don't get flagged. This thing
Mm.
I'm saying in public, I hope maybe someone will not say, she's giving
But then the
it
truth about it is, it is not
illegally.
illegal. Let's The reason why I would come on and talk about this is not illegal, right?
Okay.
It is just that the central bank has said, okay, do not pass it through our system. Doesn't mean that you can be arrested for trading cryptocurrencies, but central bank can say whatever he wants to do, take it away from us, right? So in whatever you decide to do, and the reason why, because I mean, I have a global audience, I have people in my club.
Mm-hmm.
Oh yes, please
Yeah.
guys, subscribe to my channel. Yes, if you are here and you're not
Please do.
subscribed, yes, I give solid
A
content.
lot of
Please
a lot.
subscribe to my channel if you are here. I didn't even remember that I should be doing my PR, right? But please do subscribe to my channel. But the reason why I would come up here and talk about it is because it's not illegal. And then I think the last question I'm going to ask, let me look at all the questions and be sure that we didn't miss out on any. We said, okay, how can I store my crypto safe? How can I start investing in crypto? Blah blah blah. You've told us the website. But the last thing I was going to ask really is blockchain. So let's bring it down to Nigeria, right? I see Hilary's comment. Jide is not helping. Hilary is saying that the technicality of Jide's comment is far beyond him. Oh, don't worry. That's why this session is for us to all learn, right? But look at Nigeria, right? I know other climes are more advanced, but we are both Nigerians, even though you are a big chick globally.
Mm,
Yeah.
mm,
I keep telling you, you're trying to be humble.
keep finding me, ma.
But then you are positioned, you are in a future space, and that's the reality, right? But what can we as a society in Nigeria use blockchain for now? Maybe not crypto. You've talked about the payment system, and we know that our regulators are not that's not something that is scalable right now based on regulation. But what other uses can we have for blockchain technology? So in health, in education, in any of the other sectors that need help right now, what can we use blockchain for? I think that's the last question before we go.
Well, when it comes to the technology itself, there's been before I come down to Nigeria, because before we look at the Nigerian landscape, it's good we see what those who are building in other parts of the world are doing with it. So Blockchain is presently being experimented on either in pilot phase or production phase in the finance industry, the supply chain industry, the healthcare industry. There have been a lot of consortiums. You have different variants of enterprise blockchains like Hyperledger, Coda, working to see how they can actually use the technology to probably save costs or reduce fraud, because it looks more like a fundamental um, selling point for the technology itself is the fact that you can record tamper-proof transactions with them. So the human
Mm,
interference, the tendencies of humans interacting with the history of a particular transaction is as good as zero, right?
okay.
Because of how a blockchain is foundationally built. So use cases that surround fraud, you know,
Okay.
in general, in natural states, are going to be very popular use cases for blockchain technology. And a lot of industries, especially in supply chain, I know of a few companies I really look out for. Provenance, trying to there's provenance, trying to validate the life cycle of meat and protein being transported across countries. So with the blockchain, you can tell, okay, this is the history of this meat, the condition it was before it was processed
And
and
it
all.
can't be tampered with.
Exactly. Healthcare records as well. With the blockchain, you
Mm,
can easily see, okay, this is the medical history of this person over time. It can't be tampered with. Everybody on the network can easily gossip between themselves that, okay, she came to my hospital today and her records have been imputed on the blockchain. Now, the problem is,
mm,
yeah, the problem with this technology is because it's still in the nascent phase. A lot of industries, a lot of people, a lot of companies are trying to evaluate the cost effectiveness. Is it going to be cost effective? Because it's a different thing from having a breakthrough technology, and then it's a different thing from having a breakthrough technology that is more expensive than the incumbent, right? So I think a lot of industries, companies, they are presently at that point where they are trying to experiment and see, okay, transitioning fully to blockchain, is it worth the hype in terms of costs? Will it help us increase or maximize profits in the long run? And when it comes to Nigeria, I really love what the Nigerians are doing in the crypto space. I am so proud of Nigerians. They are building a lot of things. But like I said, we are still in the experimental phase. I feel like it's too early for us to know native solutions with blockchain that will become disruptive in the next few years. I think it's still too early. But
mhm.
I like the fact that even here in Nigeria, we have communities where they are experimenting either on how to make payments more affordable and more inclusive, or probably building applications around how to prove trust, because that's another
Mm,
fundamental value, blockchain probably brings, right, to the society. So I like the fact
mm.
that we are still in the experimental phase, but then I feel it's too early for us to pick clear-cut winners from this
From this
industry.
whole journey.
I
Yeah,
think it's still too
fantastic,
early.
fantastic. I think this was a good way to end this because literally what you've said tells us that it's still the future.
Mhm.
Um, but it's one of those things that sounds like Greek when someone is
Yeah,
talking,
yeah.
right? And I want to believe that from the engagement I've seen in the chats that people have actually gotten some clarity. Angelic, I'm not sure if I pronounced your name properly, but yes, the replay will be the same link. It's going to be hosted with this same link on YouTube. So if you saw it, you would have seen the link in the chat. Where you saw it on LinkedIn, you would have seen a YouTube link. That link is going to be hosted as soon as I end this broadcast. It will
So
be
when it
available
comes
there immediately. Go
okay,
ahead, Jennifer.
when it comes to investing for newbies,
Mm-hmm.
I would always advise for you to invest in popular
Okay.
cryptocurrencies, not in
Okay.
shady cryptocurrencies, celebrities probably shield online. Popular cryptocurrencies, if you want to take that factor into consideration, are cryptocurrencies who probably serve the use case of an ecosystem, like blockchains like Bitcoin, Ethereum. As a newbie, trust me, the best type of cryptocurrencies you probably need to put a small stake of your investment in are foundational cryptocurrencies that have an ecosystem built on them. So if you go to CoinMarketCap or CoinGecko, it might look like, okay, you're not making a lot of money right now, but if you're able to get a little stake in some of these cryptos like Bitcoin, Ethereum, Atom, Solana, Blockchains that have an ecosystem of applications built on them, that's your peak. If you actually want to bet on the future of cryptocurrencies as a
Mm,
speculative investor, I always advise newbies to bet on cryptocurrencies that serve fundamental use cases across, a whole ecosystem. So go to CoinMarketCap, go to CoinGecko, the first 10, 20, 50 cryptos that probably have applications built on them are your best bets as a newbie.
mm,
Forget all
as a
these
newbie.
cryptos they keep shading, shilling online. Just stick to those ones if you're ever going to toss money, in crypto. In the
In
long run,
cryptos.
yeah, in the long run, that speculative bets could pay.
Okay. Sorry, one more question. Chichi just asked a question, but I think this is NFTs. I want to believe. She said a word on NFCs, but it
NFT,
should be NFTs, right?
yeah.
Right? Is there any crypto thing like NFCs? Because I would
No,
have thought to be
I'm sure
NFTs.
she means NFTs,
NFTs. Okay, a
non-fungible.
word on NFTs.
Yeah, so I know it's a popular fad. Everybody is talking about NFTs, but what's popular now are NFTs in form of profile pictures and all. So let me bring it down. An NFT is a non-fungible token. It's non-fungible because it cannot be exchanged for, it doesn't have a duplicate. Its
It's
properties are
duplicate.
very uniquely, yeah, are very uniquely minted on the blockchain compared to Bitcoin. One Bitcoin can be exchanged for one Bitcoin, and you're getting the exact properties of one Bitcoin when you exchange it for another Bitcoin. But with an NFT, there's no equal value you can exchange an NFT for that gives you the exact properties of that NFT. So it's a currency that is uniquely created. Bitcoin, Ethereum, those ones are fungible because they
Fungible.
can be exchanged for, the same value. You can exchange one Bitcoin for one Bitcoin. It's also divisible. You can exchange zero point 0.5 Bitcoin, a fraction of Bitcoin for a fraction of a Bitcoin, right? But you can't exchange a fraction of an NFT for a fraction of another NFT. It's a uniquely minted token on a blockchain.
So it's still
Now,
on the blockchain too.
yeah, it's minted on a blockchain. It's a token, right? But it has a very unique property because it can't be exchanged for another token, and it's also indivisible. You can't divide it into fractions like Bitcoin where you have, yeah, fractions and all.
Okay.
And so when it comes to NFTs, I know a lot of people go around saying, um, this NFT is unique, one of one, two of two, three of three, because they try to sell the perception that you're buying a single NFT that has one unique feature, right, in it. But when my first rule of thumb when it comes to NFT investing is investing, if I'm going to invest in NFTs at all, right now I'm not a big fan, but I see its potentials on a long run because NFTs as unique tokens can really bring value to the artist community, right? In quotes, a lot of musicians, it's 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 a better property compared to fungible tokens for the art industry because musicians are very unique. Artists, the creative industry rather, is filled with a lot of unique individuals, unique participants. And an easier way to sell something unique will be if it has its own, standard unit or value of measurement where people can sentimentally appreciate. So I think right now, NFTs will definitely see a lot of traction in the creative industry where its single value as a unique asset is highly appreciated. That is why you see industries in the creative industry like Disney, like NBA Top Shots, a lot of these guys in the creative industry, sports as well. You see a lot of them trying to promote NFTs for fandom. For example, they'll tell you if you buy this NFT, it will give you access to a community. You have social tokens in form of NFTs, right? So at the end of the day, just keep that at the back of your mind that the whole NFT idea is is mainly built on the value of uniqueness, right? It's is based on the value of uniqueness, the value of uniqueness that portrays the fact that you cannot exchange an NFT at the same value with another token. And based on the fact that you can't really divide an NFT into different fractions. That's a major tenet when it comes to NFTs. So it's going to be a game changer for the creative industry. Yeah, but
Industry.
I think that right
Fantastic.
now, that's more to it for NFTs.
Fantastic. I trust that answered Chichi's question. Thank you so much, Jennifer. She said, Jennifer O Obem on LinkedIn. She's also on Instagram, but I don't know if she's so active, but I'm sure
Yeah,
LinkedIn is her place. And I am sure you agree with that she has been so amazing. Like I'm so wild. And she just wondered,
thank
what's wrong with this
you.
Ola? I'm always telling her I'm wild because I mean she has done the work. She has actually done the work. And well done, Jennifer. Thank you so much for your time. I
Thank
trust
you.
this was useful to everyone. I
Me
always say
too.
on my channel, you can't outsource your health and your finances. You have to engage. So whilst everybody's shouting about these things, you can't just wish it away. It is coming for us all, right? So you have to engage. You have to be involved. At least have an idea. So when people are talking, they don't sell you in front of yourself. You get why are there? Like you don't be sold. At least be able to join the conversation, right? Oh, thank you, Esther. Thank you for joining in. Thank you, everyone. Thank you. I see everyone. Kemi Oshimosu. Thank you. Thank you, Chinyere. Thank you, Esther.
Right.
I really
Thank
appreciate you all.
you.
Have a beautiful weekend. Bye.
Bye.